Global Head of Derivatives at BV Energy, Henning Gloystein, Director of Energy, Climate and Resources at the Eurasia Group. And for the first time joining us today, I'd like to welcome Mr. Osama Rizvi, Energy and Economic Analyst at Primary Vision Network, based in Pakistan. Thank you for joining us, Osama. Good to have you with us. Henning, I will start with you, please. What is going on, this yo-yo of the Ukraine situation, obviously driving the markets nuts. Maybe they like that volatility, but we literally are every 24 hours, getting a different impression on what's going to happen on the ground there. Obviously games being played, and it seems Putin has played Biden and Macron right into his lap. What do you expect things to escalate further, or do you expect, as we saw last night, the summit being called to calm things down?
Thank you, Diala. I'm afraid we don't really know, and that's also the problem with markets. Nobody really knows what's going to happen in Ukraine apart from Russian President Vladimir Putin. The United States intelligence says very frequently that they're convinced something will happen very soon. Our base case at Eurasia Group is also has recently flipped from we think there'll be a diplomatic solution to we think there'll be some form of military escalation, but we don't really know. And then for sure, overnight, there's this news that the French initiative might be taken up by the US and Russia, that there might be some form of diplomacy. But in the end, I'm afraid we don't know. So it's Monday morning, and markets don't know, and nobody else on the ground knows what's going on.
How do you explain Biden and now Johnson jumping on the same kind of rhetoric bandwagon of really, really ratcheting it up? This is going to happen. There's not, we're just going to be sending things in case something happens. No, Russia is planning to, despite what Putin's saying. Is it purely for domestic political purposes? Those two are talking that way, or is there something more to it?
No. So our sources in the United States, they say very clearly, they've told us, but they've also told the public, for that matter, that they really think the signs on the ground are that something will happen. There's now, the Russian pledge that they would pull troops away hasn't happened. There's almost 200,000 troops on the borders with Ukraine, and these acts of creating a pretense for intervention are happening. The shelling of a school, in areas supported by Russian separatists, the evacuation of ethnic Russian people out of eastern Ukraine for saying that there's apparently genocide going on. That's what Putin kept saying without proof. So this pretense is really happening. What the UK says in this crisis, we really don't think really matters very much, because Boris Johnson needs something to deflect from his problems at home. So he's just mirroring what the United States says. But the US clearly believes something is going to happen.
Omar, just to go to oil markets, we've seen again, this impacts oil continuously up and down, up and down. It's dropped a bit overnight because now things look like they're going to be resolved, and we have also more positive headlines coming out of Iranian oil. Your point of view of where the markets can go with these mixed signals?
Well, we'll have to just wait for the signals to trade. I know that every single trader is waiting to read the news before he buys and sells. So, everybody says that the US is going to invade. Just like they said, Iraq had weapons of mass destruction and all the rest of it. And, they're completely wrong again. Everybody seems so... what's amazing is the closed-mindedness of people. Nobody questions, nobody looks, and they kind of spoon feed you this stuff, and everybody just gobbles it up and nods. Putin wants to invade Ukraine. Why? Doesn't matter, he wants to invade. When's he going to invade? Wednesday. Well, it didn't happen. Next Wednesday. Well, we don't know when, but we have intelligence. But there's no proof. What's your proof? We don't have any. So it's all kind of, extremely silly. And what's even sillier is to kind of expect that markets where people basically move millions and billions of dollars a day are actually watching this stuff and paying any attention whatsoever. Zero attention. I couldn't care less if basically Putin invades or doesn't invade. You know why? Because Russia has said, he has said, we're not going to invade. And Europe and the US say, if you invade, we will. And he's like, we're not going to invade. But we will absolutely. I'm not going to invade.
Yeah, well, it's
But
been
you
going,
know, if you invade, I mean, it's ridiculous. It's absolutely ridiculous.
Which
It's
begs the
laughable.
question as to why they're doing that.
It's laughable because they have absolutely no clue. It's Sleepy Joe, Bojo, Macron, Macaroon as I call him, and the hapless German chancellor, the new one. I mean, it's ridiculous. They're like puppets, you know, they walk around like, you know, it's unbelievable. But anyway.
Bring back Angela Merkel, I say. That's what we need. Osama, welcome again. You know, where do you see oil prices sort of heading? There's been a lot of commentary. I mean, not putting Ukraine aside, but clearly that's yo-yoing up and down. And there is a geopolitical risk premium in the price today, many would argue. But, you know, what is going to dominate, you know, where the oil price is going into Q2? Is it going to be fundamentals, this tight market that we have at the moment, or these headlines coming out of Ukraine? And what's your projection for the year ahead?
Thank you so much, Diala. I mean, it is, you know, whatever is going on, especially the Ukrainian and Russian conflict, it is a little funny at times. I would agree with Umar, but, you know, it's, I think now, and there was somebody wrote about it as well. Now we are past that point that the Russian-Ukrainian conflict will have the same influence on oil prices as it was, you know, doing so in the past 3-4 weeks. I say that because there is a very clear idea or a very clear expectation, you know, not officially from the US or other countries, but that an invasion is not going to happen. You know, the recent French initiative, you know, calling for a summit, and they're saying that we will go for it. Such things, the framing of the issue is changing. And I tend to, fundamentals is there, technical analysis is there, but I also tend to focus a lot on the sentiments. You know, sentiments overpower and every other factor, sentiments of the market as a whole. So while the markets are very bullish, I believe one of the factors that is going to, and I wrote about it as well last week, one of the factors that is going to not end, or maybe, you know, put a break on the current rally in oil prices is going to be a thawing of this Russian-Ukrainian conflict. It will happen no matter.
What about fundamentals? I mean, the Russia-Ukraine thing goes away nicely in the next month. What about fundamentals and actual supply of new oil in the second quarter regarding OPEC? What's expected from them, US shale, etc.? Do you see that making a difference to price?
Yes, so I was coming to that point. So the second factor is OPEC, and one of the things that is one of the concerns dominating the market recently is the supply crunch, the impending supply crunch because of the increase in demand. But there have been other studies as well and different estimates, and one of the estimates says that, you know, a realistic outlook gives a 500,000 barrel per day surplus in the coming months in terms of supply, rather than a shortage of oil. You know, OPEC, according to OPEC, the market outlook looks balanced. There isn't any mention of a supply shortage as is being perceived by the market overall. And on the other hand, if you look at shale production, the production in the Permian Basin hit its recent record high, you know, and the overall production is expected to add more or less 900,000 barrels this year, and more than 1 million barrels next year, and it will go up all the way to, if I'm not mistaken, 13 million barrels per day, the US production. So we're talking about fundamentals here. Global crude oil on water even is not at that point as it was during COVID-19, but it is still much higher than pre-pandemic levels. So even on the fundamental sides, if you see, you know, realistically speaking, sans all the rhetoric, I think oil prices are headed towards a correction. That is my personal point of view, of course.
Okay, and I mean, I think Almar would have agreed with you, because he's been saying come March, things will start to soften. Henning, just back to you on that in terms of OPEC and production, but talking a little bit about the politics around that in Iran. There's been, you know, some renewed optimism with the talks with Iran, the Iran nuclear deal, and therefore what that means with sanctions and Iranian oil coming back. Would you be as should we be optimistic this time round from the headlines? Are we going to see a breakthrough, do you think, by the summer on this deal?
Well, so sadly, I was saying almost the same thing about a year ago. There would be a deal. So we do actually currently think that signs that a compromise will be found fairly soon, which would allow for a lifting of US sanction, and all will come back. The thing is to keep in mind is everyone has the same interest and wants the same outcome. So Iran obviously wants to sell its oil. The US desperately wants a new source of oil in this environment where prices are threatening to break through 100 again. Iran's main customer, China, wants Iranian oil without any political trouble, and India wants Iranian oil as well. So basically everyone in Europe wants a lifting of the sanction. So everyone involved wants a solution, but the reality still remains that on the ground, the people involved aren't so far willing to make the necessary compromises. The Iranians can't be seen, the new government from mid last year can't be seen to sign a deal that isn't better than the last one. And the Americans, Biden, can't sign a deal that gives Iran more territory than the last deal round. So the actual reality is tricky. And that's why a deal hasn't so far been found. But in the end, because everybody has the same interest, probably something will happen at some point. So I'm fairly optimistic for this. Would be good.
Okay, Omar, just on that point, we have the IPTC conference happening at the moment in Riyadh, and the Arab oil producers again reiterating that they will stick to the production plan as it is. As Ahmed just said, they see the market as balanced, medium term. Will Iranian oil make a difference if it does come on stream? Do we need it, considering bearish projections?
Iranian oil will make a difference. I think it'll make a small difference, but not everybody has the same incentive. Iran wants a deal, not because they want to sell their oil. They're already selling their oil. They want a deal, and they're not going to compromise. The reason is that the US broke its word. So they had a deal that was ratified by the UN that the US unilaterally walked away from. There is no compromise. There is no discussion. There is no negotiation. There is one simple fact. The US must take away all sanctions, all of them, and basically allow Iran to sell its oil. And if they do that, then there will be a deal. Anything else won't happen. So I think that's why Biden has so many problems. Maybe he waits till after the midterms because he's going to get absolutely hammered. The only way, Iranians aren't stupid. It's quite amazing to me that people think that somehow people are stupid. They're not stupid. They've already been stuffed one time, lied to, cheated by Europe and by the US. They're not going to have it done to them again. It's very simple. People learn. They learned that the US and the EU is not, quote unquote, agreement capable. The Russians have learned it. The Iranians certainly have learned it, and the Chinese have learned it. And the longer we put our heads in the sand and pretend otherwise, the worse it's going to get.
Well, let's talk about China. Osama, just to go to consumers of all this energy, China, India, and Pakistan as well. But let's look at India and China, and and those are other emerging markets who are being impacted by these prices. What's the outlook there for a country like India? It's always been saying that anything above 75 is extremely bad, and of course, preferably go lower. Where are those? What's the economic outlook for Asian growth this year, in your opinion, given that we may continue to see these prices above 80, 85, 90? You're on mute. Sorry. Yeah.
Sorry. Yeah. So the thing is that recently, what has happened globally, but also in the emerging markets and developing economies, the EMDEs as they're called, that there has been a lot of accumulation of debt, public debt, right? Global debt hit its highest point after pandemic. I mentioned that because it relates to your question. I mentioned that because there is debt at one point, and then there is, and of course, everyone now knows that there is going to be a lot of interest rate hikes by the Fed in the US. And the problem for emerging markets and developing economies, the main problem is that all of the debt is priced in dollars. And when the interest rates rise up, the dollar strengthens against the currencies, and it becomes difficult for countries like us, Pakistan, to not only buy these commodities, but also to pay back our debt for the debt servicing. Pakistan right now is under an IMF program, and I know firsthand on the ground the impacts all of the recent global economic turmoil and supply chain disruptions have been creating in this country. So I think, and there was even a report by World Bank that slashed its global GDP growth forecast. And I think as long as this recent, how do I put it, this recent discrepancy between, the real money and the injected supply of money in forms of pandemic plans, purchasing plans, as long as it is there, it will be a little difficult for countries like Pakistan, for countries like, and even India. It's one of the 10 largest global economies in the world, but it will be impacted. The import bill for India is the third largest consumer of oil in this region. Pakistan, the largest import cost for Pakistan is also energy. So you can tell the current account, balance goes into deficit, and all sorts of problems ensue. So I don't think, the higher oil prices are going to really help.
Yeah,
and this
they're not helping. They're not helping. But a lot of people have argued that in India, particularly, that demand will continue. Demand for oil will continue because the economy is racing ahead. Depending on that front of demand and growth, economic forecasts for the year for the global economy, do you expect that we're going to continue to see very positive growth throughout 2022 in economic growth, obviously, and that's the pull for that on energy? We also have, and can you just comment also on the supply chain issue that we've had and that many are saying is possibly going to start easing?
So on growth, sure. I mean, we do actually expect that global economic growth will be there this year. Barring another even worse coronavirus variant, most economies will be opening up this year and continue trying to do so. So that should be all right. And there's still a lot of stimulus. The inflation problems, which are related to supply chain problems, are a real problem. They're not transitionary. It's not going to go away for sure. I mean, winter is pretty much over in the Northern Hemisphere now. So, demand on the demand side for oil and gas, things will ease, and hence the pressure will be going away a little bit. But overall, to remove all the problems we've seen in the oil industry, in the gas industry, in the container industry, in the semiconductor industry, lithium, everything is slightly short. Labor is short, so this will take a long time, and so the inflation pressure will be here throughout most of this year, maybe even full of this year and next year, and that will be a break on economic growth this year. But we don't currently think that it'll totally derail it.
Omar, just to talk about inflation and Fed policy, one of your favorite subjects. I mean, we are expecting that these interest rate rises. That's already been factored into the markets. We're still seeing equities suffer quite a bit. I mean, it's being blamed on the Ukraine crisis, but despite very strong Q4 earnings, we're seeing equities take a bit of a hammering still. And do you think that there's a chance that Fed policy will loosen as quickly as it's planning to tighten if we see any further damage there on equities?
Look, I mean, I think that the Fed and its little brother, the ECB, are at a complete loss. So if they increase interest rates, they're totally stuffed, especially in Europe. And if they don't increase interest rates, then they're stuffed at the polls because inflation is rampant. They have massive debts. So the EU has a little problem in Italy, and the US has a little problem everywhere else. So this inflation, I think, is here to stay. And again, it's all this. So it's about sentiment. Markets are not going down because of the Ukraine. Markets are going down in equities because people keep reading that the Fed is going to destroy and sell and all this kind of stuff. So that people who are reading it and they get a report with like lots of red and nice pictures and all this kind of stuff. So they say sell. So it's what you're getting. It's called a correction. Nothing goes up in a straight line. So I think basically it's a correction. I think markets will go back up. I think the Fed will increase interest rates. I think the equity markets will go back up even if the Fed increases interest rates.
I mean, there's been some talk from out of the Fed and the US, and there's our survey question just on the tightness in oil markets. If everyone could put their vote, will we see this tightness remain throughout the year? The consensus seems to be, from just what you hear, is that no, and certainly OPEC doesn't think so. But on the inflation point, Amar, just to come back to you on that, I mean, the Fed has also recently said that yes, we're continuing with our plans, we have to temper inflation, but actually that in the second half of the year, we see all of that coming under control. Again, coming back to the supply chain point I made to Henning, is that easing at all, and is that going to have an impact?
I mean, basically, if you listen to the Fed, I mean, people have very short memories, right? Inflation was supposed to be transient, right? Now it's like ginormous, this huge beast at 7%. And they're saying, you know what? If we wait, just by magic, you know, you'll find under your pillow, blah, blah, blah. It's ridiculous. Everybody knows the Fed is trapped. Everybody knows the ECB is trapped, yet we pretend that no. So let me put it to you this way. Inflation is rampant. They don't know what to do. They need to talk and try and scare the market, basically. If they increase interest rates, 0.25% is nothing. But if they increase it, let's say a couple of percentage points, 3%, whatever it is, everything is going to come crashing down. They know it. They can't do it. They're afraid. They've got massive debts. If interest rates goes to 3% and the US has to make payments on the outstanding debt that it has, it's going to be basically quite interesting to see what happens. So they're trapped. So they keep telling you, don't worry, we have a magic wand. They have nothing. They have absolutely nothing. They can't lower interest rates because inflation is rampant. They can't push them up because debt is huge. And everybody's like, so what's going to happen? Well, what do you think is going to happen? Everybody's going to party real hard. And then everybody's going to wake up surprisingly with a massive, great, big, humongous headache. It's going to happen. We just don't know when. So until it does, you know, cheers.
Henning, gosh, yes, scary stuff. Henning, let's talk a bit about Russia. Back to Russia again. Let's bring China into that. We had Putin at the Beijing Olympics a couple of weeks ago. You know, new best friends again, saying that, you know, they basically are in control of everything. Where do you see that going in terms of the energy markets? Do you see any risk of you know, Russia not needing, let's say, Western Europe as a consumer for its oil or gas, and looking at China more as a focus? I mean, in a sort of 2 to 3 year outlook, 5 year outlook, and how is that going to affect decision making?
I mean, in the next 2 years, there's nothing Russia can do to replace Europe with China. I mean, but I mean, for all, by all means, it's true that Russian gas exports, especially to China, will be increasing. They're building a big new pipeline, and by all means, I mean, you know, China is one of the, well, it's the biggest gas demand growth market in the world now, and that Russia wants to tap into it is perfectly natural. But just to put it into perspective, Russia currently sells 180 BCM of gas to the EU, and it sells 10 BCM to China. And you can't make that difference go away even in 5 years. But in the long term, Russia will have to do something, because even if the situation improves and everyone is peaceful and lovely to each other again, the matter of fact is the EU does say that it's got its net zero targets. It wants to reduce its fossil fuel imports by everybody in the next 20, 30 years, and that will affect Russia. And so Russia wants to find a new market. The only problem is that with a 10, 15 year delay, China wants to do the same thing.
Yeah, I mean, China's also has transition plans, and that's definitely way into the future. But I think it's more a question of, well, can Europe survive without Russian gas? And obviously it can't, and that's obviously impacting partly how it's behaving towards Russia. Osama, just a question. We have an article on our digest today saying a New Deal economic sort of pact signed between India and the UAE. I mean, India and the UAE already have, you know, obviously a very tight relationship. What's what's this comprehensive economic partnership going to do to boost trade and investment? I mean, what's the change there?
I think, I mean, I haven't had the chance to go through this report, but I think India and UAE are partnering very closely on other initiatives as well. One of them is India is building a food corridor as part of a, Indo-Mediterranean economic corridor. And Saudi Arabia and UAE are among with Israel are the main funding current countries there. And I think India is really forward looking in this regard, because one of the things, and it relates to all of the inflation and dollar, and one of the major things, important things here in this region is food prices. And whatever is happening, it is going to impact food prices in a very adverse manner. So India is, I mean, really, putting all its effort to assure steady food supply. Obviously, it's the second most populous country in the world, expected to be the most populous country in the world. So yeah, I mean, I didn't look at this report, but I think their relationship is only going to get more. It's only going to get stronger because of the fact that they need each other.
The food security question is very interesting in the UAE. Obviously, there's a lot of reliance on imports, but a lot of investment also in technology and into sort of new food, hydroponics, etc., vertical farming. That's all coming in. We'll just get that result up again. 60-40. Do you expect all markets to remain tight throughout the whole year? Yes, that's quite a sort of bullish outlook. Osama, just to go back to you on that, and just to get your comments on Iran. With regards to that supply and whether you think it'll make a huge, I mean, a lot of people have said there's plenty of Iranian oil on the market already. So, and if it comes back, it's been factored in. So yes. Any impact from it if it does come back in the next quarter?
Yes, I mean, the Iranian dimension is very interesting and has multiple aspects to it. Very quickly, what the problem with Iran is that whenever there is a chance of a deal or something, they tend to take a very hard stance. For instance, they have demanded that the IRGC should be put off the terrorist list. I mean, you have to meet the other country halfway. That's one point. But however, from the US side, I think Biden can use this opportunity, and that's one of the reasons I think the Iranian deal will happen, because gasoline prices are its highest, since 2008, right? If I'm not mistaken. So, and Biden has openly, publicly called OPEC, requested OPEC to increase production, which they cannot, because, according to IMF, even Saudi Arabia needs oil at 82 point something for fiscal, to balance it, to break even in a fiscal manner. So Biden can use the Iranian deal to really bring down the prices of oil. And I think, yes, the Iranian deal, when announced, will have an impact, although their exports are right now in the market. The oil is still flowing there. But once again, coming back to the sentiments, the impact on the sentiment of the whole market psyche that this announcement will make is going to cause a correction, right? Yeah. There'll be another bearish factor added into it. So yeah, I think.
Thank you, Osama. Henning, just to go back to you to close off, in terms of that Saudi Arabia, Osama mentioned them. I mean, in terms of the spare capacity question within OPEC, there's been a lot said about that in the last month or so, and that even Saudi and the UAE today cannot add more oil technically, and they're saying they're not going to, but can they? Is the question, should they use any spare capacity they have? Many have argued that would be even more dangerous for oil prices. And how long do you think they'll resist that? And what is the price that will sort of make them change their mind?
In the UAE and Saudi Arabia definitely can raise oil production, for sure. The question is whether they want to fully do it or not. I mean, they're quite enjoying the high oil price, and fair enough, good for them. At some point, I think they will adjust their position. They'll gradually increase supply, because demand will return to pre-pandemic levels this year, if nothing goes terribly wrong. And they will have some spare capacity to meet the market, but they won't flood the market, and they probably can't totally flood the market. And they are watching situations like what's going on in Iran quite closely, and they don't want to flood the market right now and then create an oversupply that they've just spent 2.5 years to get rid of. So I think they're being cautious. and that's what we're seeing right now. It's the result, but they can increase outputs. Yeah.
Omar, we'll let you close off. What's your latest sort of ceiling for where we're going to see oil prices go within the first quarter? I mean, your sort of technical ceiling and floor. Are we going to see $100?
Yeah, I think you know, if we're going to see $100, we're going to see it now, before the end of March, maybe middle of April at the latest. And then, as someone was saying, correction. But I mean, what gets me is like how we think, right? So we tell the Saudis and the UAE and OPEC and Russia, basically, screw you by 2030, 2050. We don't need you. We're going to screw you. And then we're like, but can you do me a favor? Could you actually increase oil production just a little bit? I mean, this is the problem with the West. They can't, and then the green stuff, right? So they go, now we have to take care of the planet. We haven't done so for 200 years. We've burnt, destroyed, deforested, but now it's important because we're green, you know? And it's okay if you're developing countries, you're screwed, but hey, everybody's green. So, I mean, the double talk that happens, the hypocrisy, and they think that nobody sees it, and everybody sees it. Russia sees it, China sees it, Iran sees it. The world is changing, my friend. So, you know, you better kind of have a change of view because the world is moving that way.
The world is certainly changing, and we hope and pray for the better. That's for sure. Gentlemen, thank you so much for joining us this morning. Thank you to our viewers. Have a good Monday, and we'll talk to you all soon. Thank you.